Hi, this is Guy Gottslag, president of My Digital Money. Okay, so usual disclaimer, not financial advisors, tax accountants, any of that. But is there a volatile proof for you as an investor to invest in crypto? No. But there's ways that you can mitigate the risks.
Okay, good enough.
Yeah. And so the way you can mitigate the risks is, well, there's many different ways, but I typically like to have a risky pile and a less risky pile, right? So the less risky pile, you can, invest in cryptos long term, right? Especially ones like Ethereum and Bitcoin that are relatively stable and, you think over the long run will go up. And then with your risky pile, you can diversify across cryptos. A lot of people like to just invest in Ethereum and Bitcoin, but I also recommend getting in on some of the coins that have a lower dollar amount because there's more potential for growth there. And so, diversifying across all the coins definitely helps reduce the risk because some of the smaller coins might really take off. So even if you invest a smaller amount in those compared to Bitcoin and Ethereum, that can help offset. It's just like when you have venture capital companies and they invest in a bunch of startups, knowing that 90% will fail, but then that one that succeeds actually, ends up making them profitable, right? And so, yeah, diversifying across coins, especially the kind of newer ones that have promise. Yeah, and then so the other way is using trigger orders, right? So you could you could set a certain goal for how much margin you want to make, and so you could set, let's say, to buy Bitcoin at 40,000 when it dips to 40,000, and then when it goes up 5%, you can set it basically to sell and take that profit. Now the downside is that you might leave some money on the table if the price continues to go up, right? Or if the price would have continued to drop below 40,000, maybe you could have optimized. But it's hard to time the market that way. And I think some of them, a lot of investors, they want to make like 100% on their investment before they sell, right? But I think the most successful ones actually end up making much less, like 5%, but then they keep doing that, right? And it's really hard to time the market and to wait around for 100%. You're going to do that once in a while, whereas with trigger orders, you can take, let's say, 5% more frequently, and so you end up earning a lot, right? So I like to do that with kind of a smaller pile or a portion, and then the other portion you just hold, right? And then eventually you could sell it for 300% or whatever. So trigger orders is one way to kind of, yeah, and then beyond diversifying into various cryptos, also different assets, right? And so stocks, real estate, anything really. I always propose to people, not as an advisor, but my friends, you just diversify as much as you can. And also stop obsessing over all the hype that's out there. There's a lot of misinformation out there and a lot of people that just want attention. So again, I'm a proponent of holding long term. So pick a coin that you believe in the technology and the utility, and hold on to it and ignore all the speculation and all the misinformation that's out there. But there are some sources like, I'm not biased at all, but My Digital Money, right? We have objective information where you can learn about the good things and the bad things of each coin and about what's happening in the market and make your own decision as to what you think is going to happen. But don't just follow, speculation. Someone's saying, oh, the market's going to, this coin's going to go up to 200K, and then you just follow that. I mean, why? Why is it going to go up to 200K? Like, you need to just get all the facts and go to an objective source of information like My Digital Money.